honestly, a statement needs to be made on this because it's sad. I mean, people really got hurt. And the SEC is meant to protect people. Now, the protections weren't there. The rules were unclear. People got hurt, and now you're giving them even more hurt by not being able to write this stuff up.
Welcome to BitBoy Crypto. My name is Ben. I'm getting ready to go to LA. You guys are getting ready to watch an interview with my guy Lorenzo. Shout out to Lorenzo and his company for sponsoring this video. But in this video, you're going to get some tips on how you can really make it in crypto. Let's get it. All right, guys, I'm joined by Lorenzo here from Lorenzo Tax and also from Origins Group. You want to tell everybody a little bit about yourself and what you do?
Yeah, for sure. So I'm a CPA. I'm really focused on the crypto space for some time now. And that's where our firm is based at. We're helping people in this crypto world navigate this really complicated space. I mean, it's ever changing. I mean, I feel like every other week, especially now. I mean, this is dated, 3/15/23 right now. So, I mean, by next week, we'll probably have something new to talk about. And that's where we help people out with is getting their crypto taxes figured out. Actual tax compliance and preparation. And then the area that's most exciting is really tax planning. It's okay, we've made this money. What do we do about it? How do we structure this to be, compliant, but tax efficient at the same time? And then honestly, it's just, we don't have some crazy large firm, and we have 15 people working for the firm as of now. And, so it's not a huge firm, but we do really quality work. And it's really meeting a lot of interesting people. This space leads you in a lot of directions. And, we're working with celebrities, sports athletes, I mean, just regular everyday folk, but just interesting people. It's more than just a client. You can have a CPA for your whole entire life. So it's really very much more relationship-based business, which is a lot of fun.
Yeah, I definitely think, networking, making good contacts is something good to do, but you've been in the space for a while now. Yeah. And, I go back, quite a while myself. And I remember like back in 2012, 2013, 2014, the whole point of crypto was not to pay taxes, so like nobody, I think it was before 2014, like everybody just kind of grandfathered in with what you did. I know you've been doing taxes in crypto since 2016. How have you seen the space change and how have you seen things get more serious when it comes to, the tax world?
I think it went through some runs, right? In 2016, 17, you had that old like ICO craze. People were getting locked up for it. So it was actually kind of serious back then too.
Yeah.
People were getting, and that's why I actually got started in the spaces. I had a buddy that was working on a project, on an ICO project. He had some friends that got in trouble, and he had crypto offshore and offshore exchanges, and he wanted to bring all this back. And he contacted numerous accounting firms, big accounting firms, and no one knew what to do. This is one of my friends calls me, he said, Lorenzo, I need you to learn this stuff. I want to work with you. You've been doing my taxes. But he goes, and honestly, trust me, if you listen to me and actually do this, you're going to make a lot of money in this space. It's a big need. And I'm happy to listen to him because ultimately my experiences led to here, but it started there, which then he introduced me to a bunch of his friends because he was running a crypto group in New York and Long Island. And from there, a bunch of his friends were in the same situation, so they became clients of mine. So back then, what was interesting, in 2017, they came out with a rule because it was hard to swap in between coins back then. If you swap between Ethereum, Bitcoin, or Litecoin, it technically wasn't a taxable event pre-2017, which is a really interesting rule. People don't realize that. Like back then, it was just difficult to get in and out of stuff. So you had to swap in order to get out of certain projects. So they're not treating those as capital events. But now it's much different. So back then was pretty serious because the rules weren't clear. People were raising money and they were getting in trouble for it. Honestly, more so than today, I feel like.
Well, the money was real big with the ICOs. And I think one of the big differences between now and then was all the rules were they were very unclear. And so Americans were allowed to invest in a lot of stuff that Americans shouldn't have been allowed to invest in. And I think when it comes to, like the SEC, for instance, and a lot of people don't get this, is that the SEC, they don't actually do their job, but their job is actually to protect investors, right? It's to protect investors and hold the people that launch projects and exchanges accountable. Well, so if you were an American and you were allowed to invest in something that really technically only foreign entities should have been able to invest in, like you are fine. You could have made that money. It's okay. But a lot of the people that started the stuff and the exchanges, like they were held liable. And those were the people that were going to, jail, prison over some of this stuff. So does that sound right to you?
One of the things that bothers me with the SEC that they've done and I know you've had your quarrels with them.
Oh, yeah.
Say what you gotta say, but but really though, if you really think now, the problems we're having is people lost a lot of money when it came to Celsius, FTX, even just rug pulls, the little Instagram scams where everyone's asking you to give you money. I mean, people fall for that stuff.
Mm-hmm.
I've had horror stories. And it's worse when you see older people, like older people that got hoaxed into these kinds of things. I had a woman, a family that they, 70 plus, sold 3+ million in investments, real estate investments, cashed out, threw a lot of it in crypto, and got it all stolen.
Wow.
So it's like your life savings is gone. And these protections aren't there, but now with how the IRS's codes work, a lot of times you're not even able to write this stuff off. And honestly, a statement needs to be made on this because it's sad. I mean, people really got hurt. And the SEC is meant to protect people.
Right.
Now, the protections weren't there. The rules were unclear. People got hurt. And now you're giving them even more hurt by not being able to write this stuff off, even if you take the proper precautions of, a police report and filing it the right way. Like, it is sad. It's really sad. And that's something I would love for them to come up and clarify a little bit more.
Yeah, I mean, I think definitely when it comes to, things like retail clawbacks, bankruptcy laws, like it's also backwards the way it works. Like it's all geared to protect the corporations and the people that actually put all the money on the site, which are the retail investors. They're screwed. Like we'll be lucky to get, from what I'm hearing now, like be lucky to get 20%, because they want you to take a haircut on top of a haircut on top of a lesser amount that they're valuing your assets at right now. And it's just a mess, to be honest with you. And I think that, we're going to see, I think a lot of these terms of services have to get changed completely, because you may not know about this, but there's actually a law in the books right now, or a bill.
Mhm.
I think it was HR, I'm going to butcher it. I think it's HR 1453. It has something to do with small business. But it is actually, they're looking at changing the clawback rules. So what may happen with Celsius users is you may get found that you have clawback exposure. You got to send money back to Celsius, which I would never send anyways, but you may have to do that. And then before you actually have to send it, the laws are changed and they go back and they wipe out all the clawback. So do you think it's better to have a lot of these things regulated with laws, or do you think having like terms of services that are very clear and letting people choose where they put their money? Which one would you say is probably better?
I think having some regulation with laws, make it clear, just make it defined, make it black and white. Just you're on the left, you're on the right.
Yeah.
You're either right or wrong. And that's it. Right. And there needs to be some differentiation from historical laws and what applies to crypto and digital laws. Like it is what it is. I know we can go and try and use all we've done that for now. We've done that. We've used what we've done in the past and tried to apply it to today's world. And it clearly hasn't been working because people are still confused. Granted, it keeps me in work. It keeps me at a premium. So I'm not complaining in a sense, but I am complaining because it's for everyone. And I get it all the time. People are just confused and they have so much anxiety over this whole thing. Like I'm more of a money therapist than I am a CPA.
Yeah.
I sit there with people and honestly, they're like, thank you for helping me with this because it's been on my mind, for so long. And I just wanted to figure this out. So one thing I want to point, and this is something that we do, I don't know any other accounting firms doing this. So, I mean, giving out some like inside knowledge here for what people should do in handling a lot of these Celsius issues. So like this is a good, alpha for just anyone listening. If you have either a project, an exchange that went down, you got rug pulled, you got money stolen, etc., and you're unsure, create a flow chart of all your wallets. You have your main centralized on-off ramp. Let's say it's a Coinbase or Kraken, whatever. Then you get off to your MetaMask or you get off to a BlockFi and you lost all your money there. Create a flow chart of it. If you have, let's just say, $250,000 in BlockFi that you had there and now it's gone. That was your basis in. You bought in, that was your money sent in. Have that in the flow chart, listed as money in, money came out. This is what's net. This is what was left over in there. And BlockFi just came out with someone they're going to give some money back to people. I mean, it's not a lot, they're giving prices of 16,000 on Bitcoin. They're literally giving the bottom, but they're giving something back. Then it's easy to calculate your loss because you know what you're getting back.
Right.
And that's what's the best thing, is getting that documentation.
Yeah, it's wild. The amount of taxes that some people are going to have to pay on money that they don't even have right now. It's just so funny. Like Alex Mashinsky, always like reassuring, like, no, your money's still there. Like, it's not gone. Your money's not gone. Like, it's there. It's like, yeah, it's even worse though, because it's in purgatory. So it's like, technically,
it's like, oh, you're right. It's like purgatory.
Yeah. Like technically you haven't lost it yet because it's technically still there, but it's not there. You can't take it off. So you don't have it. And it's just a circular problem that you would think the government would be able to step up and like see that, oh, wow, these old laws don't really seem to apply and work when it comes to digital assets in today's modern technological world. Like, maybe instead of having a security law from 1933, maybe we should change one to be this millennium. I don't know. Call me crazy.
Well, let me ask you this. What have you seen as some of the biggest problems that, because I'm sure the channel gets questions. I'm sure people come and ask you these questions. What have you seen as being like the biggest hurdle?
The biggest hurdle is just people not knowing what is taxable and what's not taxable. And I think that the rules have changed a little bit over the years. In general, they're the same. But it scares people away from trading, scares people away from, I know some people that have never even moved an asset because they're scared of tax implications. And I think just clearing up that fear and having people understand what they can and cannot do and what is and is not taxable, and I don't know, you're a tax guy. So I'm sure you see a lot of this. I don't know what your feelings are on this, but for me, like, I hate seeing people make decisions based on fear. Like, I hate that. And that drives me crazy. Like, look, if you have to pay taxes, that's a good thing. That means you made money. Like, you shouldn't not want to make profits because the government will have to take some. Like, that doesn't make sense. Like, you're still making profits. So to me, for people to understand what is taxable, what's not taxable, and then, the extension of that, like, when they understand those rules, now they know how to operate and not operate out of fear. I think those are the biggest hurdles I've seen.
There's two things that I see with clients right now and why they're very happy paying me to help them out. One, they lost a lot of money. They don't know what to put down and be confident on that. So if the IRS ever asks, hey, I lost X, but I don't know how to get to this because when I put it into the software, it's telling me a number that I know is wrong. And I sign off on that. I do the calculations. So if they're audited, I can directly represent the client so that they're happy. Like, okay, I got this loss. It's on my books. I know what I got to do going forward to make money. So now that's cash free. That's like tax-free money now, profit. Or two, you made money and we're providing a good value to you because we saved you through good planning, and they're happy to pay us because they've made the money. And then they ask me, well, what's it going to be next year? And I tell them, there's differences. Compliance, it's just every day, just let's file a return for you. And then there's tax planning where it's, you made $2 million, but we saved you $1 million. So what is it worth for me? It's not, I'm not a $1,000 return if I save you $1 million.
Yeah. So
it's just, if they're going to pay me money, it's because they're happy that they saved it. And that's big to save people that kind of money. I mean, if you went from supposedly owing 40% down to 20%, it's all about zeros, right? Percentages are percentages. So if you tack on more zeros, 20% is a big number.
Yeah, I think anything people can save is definitely, advantageous. And I know a lot of times, you get with the wrong tax people, and before you know
it gets you into more problems than anything.
Absolutely. You're looking to save money, and then when you end up like, wait, I actually owe more now than I would have if I would use HR Block. Like, that's a problem.
Yeah, tough. Ben, let me tell you something. I'm going through an audit right now. I mean, I was just telling you before, this thing's 2-3 million trades right here. IRS, the agent's pretty cool. We're working together. He just wants it done right. But I've also spoken to some that are tough.
Yeah.
Man, they're like, this is the rules. I don't want to hear it. Like, no negotiation kind of a thing, just straight. So it's kind of luck of the draw a little bit, but I mean, you got to be ready for it. And you're doing stuff with regulation. I mean, what are you trying to propose here right now for like, what can we expect? Like, what's something that, we could brace ourselves for, or at least trying to go for?
Yeah, well, I mean, right now, what we've been told is that the stablecoin bill has to be before anything else. But what we're working on is a digital asset commission. So it's, our original plan was for it to go up under the CFTC. And there's going to be 2 CFTC commissioners, 2 legal experts, and then 3 high-level crypto people, crypto representatives that we would have a hand in choosing, make sure they're the right people and not the wrong people.
Yeah.
So the whole thing, what we're proposing is, or we're going to continue to propose, probably in a different way next year, But it's that we actually, as people in crypto, that we get a seat at the table. Like crypto needs to be regulated by people that understand blockchain, people that understand crypto, not somebody that got voted in. You're a doctor, like you're a doctor and now you're a senator. You shouldn't be able to determine what's going on with technology. Like that's not your wheelhouse, you know. Maybe medical technology if you're a doctor, but certainly not blockchain. You don't understand it. None of your staffers understand it. So let's let the people who understand it make the rules. And if you have people that don't understand it, that want to argue with those people, like, sure, send them in to argue. But at the end of the day, we're going to come up with some common sense stuff on how to regulate crypto that's done in a non-threatening way to the entire space, where we still get the innovation. You know, we don't want to stifle innovation. We don't want to stop people from trying. I mean, it's kind of the same thing with taxes, right? Like you don't want to kill people's motivation to make money. You know, you want to kill people's motivation to build crypto companies. And so that's what we're working on. And, you know, obviously the crypto tax laws would fall up under that commission. All the power from the SEC would be gone in crypto. And I think that's what everybody wants. So that's what we're trying to do. So like I said, we've been told our stablecoin bill, or the stablecoin bill, will come first. It'll have to get passed first. So it gives us a little longer of a time frame to start working on this stuff. Now we're looking at maybe being able to skip over the CFTC, maybe create an independent organization that regulates crypto that's separate from the SEC and the CFTC. That would really be ideal.
Well, I mean, that's also what's part of the problem. You got two people here.
Yeah.
Who's taking the lead? It's like you're tiptoeing between each other. And it's like, make a decision. Who's gonna be the voice of reason? Who's gonna be the person, the go-to person? So it's confusing. It really is confusing. But you know, I gotta say, I find it to be almost pretty easy at this point, because there are rules, there are guidelines. Now, there is a little bit of gray and clear. What I mean by gray is like, okay, we know the rules, but is this right? Like, you know, for example, an NFT project that lost all its money, but received, you know, let's say received a couple $1 million on a drop, and now their Ethereum dropped all the way to nothing because they started at the peak. I mean, what do they do?
Yeah.
Right. When you have, because income is you earned it, and then capital gains loss is like two different things. Right. So if you talk to a black and white accountant that's going to say, like, this is the rules, this is that, you can't offset a capital gain or loss with income. Right. It just doesn't offset. There's two different types of gain. So that's a question that I would love to get very good clarity on, because so many people ask it, because an NFT project wants to be compliant. They want to be helpful, but if they pay the taxes, they're going to wipe out their whole treasury. That's it. End of business. Close the doors.
Yeah. What's the point?
Okay. So why should we even be in business? So it's either we're going to close the doors and call it a day, or give us a shot. Like, let us try this. So I guess that's kind of what you were saying before. It's like, try to keep the businesses here that are working. But these are the types of questions that we need answers for. And a lot of CPAs don't understand that. What I found is, like, hiring someone, because, you know, we're growing, we want to hire people. I almost rather find someone who knows blockchain, knows crypto, and then teach them accounting, versus an accountant that knows accounting, and then I got to teach them crypto. Yeah,
I think it's probably dead on there. Well, Lorenzo, we got to wrap it up for this interview. Can you just tell everybody where they can find you at?
Yeah, LorenzoTax.com. We have origensgroup.com, which is our private accounting firm. It's for more geared towards high net worth individuals and whatnot. But we're actually offering, you know, we did this with you guys, so offer a little bit consultation for people to talk to someone on the team if you have any questions. So if you go on the website, you can actually schedule a call and have a free 15-minute conversation with someone from the team. We also have a crypto tax course. So if you're like a DIY type of a person, maybe, you know, you want to try to keep your budget in a certain place, you know, we have a crypto tax course on how to do it on your own, which is pretty cool, because you get the value of the firm in, you know, of course, and we're constantly updating that as well with, you know, things that are changing, and, you know, new ways to calculate, you know, new ways to, you know, do new types of transactions and how to deal with them, you know. So it's a pretty cool opportunity if you want to get involved with that.
Awesome. We will make sure we get link down below for people to check that out. And Lorenzo, we will catch you down the road.
I'm boots on the ground, baby. I want to get on this regulation side. So let me help out in any way that I can. Feel free.
Awesome, man. We'll let you know.
Awesome, Ben. Thanks so much.
All right. Thanks. Bye.